Hey
Hey
John, how
Dan,
you doing?
good. How's it going?
Not too bad.
So I'm assuming I can share my screen and it all works. Let's just check it real quick. Whoops, wrong one.
So I can see the presenter mode right now, so we see the
Yeah, I
next
know.
slide
That's
in the
why.
back.
Yeah. So let's.
And just to let you know, we have 42 people signed up today.
Wow, cool. Better.
That's good. Perfect.
I will, I guess, stop sharing for now. Right? What work? Should I keep it up or should I
Oh, you
take
can
it
leave it
out?
up.
What's that?
You can leaving it up, I think is fine.
Okay.
And I think we've done one of these before, but just to kind of go over the process, I'll go ahead and welcome and introduce folks. And I'll ask them to put a little bit about their business in the chat. I'll thank MTI for sponsoring this workshop, and then I'll pass it over you to introduce yourself and the topic. And would you rather save questions for the end, or do you want me to interrupt with questions that people post?
Um, I think I think there's time for both. So if there's any, I'm happy to ask, have them have them asked as we go along.
Sounds good. So I'll pay attention to the chat. You don't have to feel like you have to watch it if you don't. If that would make presenting easier for you. And
Okay.
I will cut in if we have questions.
Okay. Cool. All makes sense. You're a little low on my volume, so I'm gonna check my volume.
I have a new microphone, and I don't think the mic. I have a new computer rather, and I don't think the microphone on this one's very good.
Let me see if I can get here. Easier said than done, right? Uh, There we go.
Good
Yeah,
morning,
my
Paul, in the chat.
yeah, my volume was way down too, so it's part of the problem.
I'm going to say welcome to the folks who are joining us. We're going to get started here a little bit after noon, but thank you for joining us today. And please feel free to tell us a little bit about your business in the chat. Oh, landscape gardening. Do you do any plowing in the winter, or is that mostly a seasonal gig?
Seasonal, just plants. No turf or plowing.
Honestly, with how the roads are out there, I don't blame you.
Absolutely. I will say I can tell we're in Maine. I just watched the deer run through my backyard, so there you go.
We'll have someone who's an author as well, looking to do digital products around their books. and restaurant and wholesale seafood delivery. That's pretty interesting as well.
Well,
For the
good. Got
new
a good
folks
mix of
who,
people.
oh, go ahead, John.
Got a good mix of folks.
Yeah. Just for the folks who've joined us, we're going to wait a few minutes until afternoon to get started here, but please feel free to put a little bit about your business in the chat in the meantime. Wow, that sounds like a pretty complex topic. Industrial ventilation and specialty filtration. It's pretty cool. All right, I just want to say welcome to the folks who've joined us here in the last minute or two. We're going to get started shortly, but in the meantime, if feel free to put a little bit about your business in the chat so we can learn a little bit more about you. All right, let's go ahead and get started here today. I want to thank everyone for joining us, and I want to say thank you to John Nelson for presenting today on year-end bookkeeping, which is a very important topic before tax season. So thank you, John. And
My pleasure.
I also want to say thank you to the Maine Technology Institute, who is a sponsor of SCORE and has sponsored this workshop, and they're a huge supporter of SCORE in general. If your business is in the realm of technology or kind of on the cutting edge of your industry, it might be worth checking them out and seeing if they have any grants or programs for you. This workshop today is presented by SCORE, SCORE Maine specifically. And SCORE, if you're not familiar, is an entrepreneurial resource and nonprofit. We're funded in part by the SBA to provide workshops just like this one and to provide one-on-one mentoring. So if you do feel as though you might need any help with your business in any area, marketing, bookkeeping, just like this, business planning, applying for funding, please feel free to reach out to SCORE and they will assign a free business mentor to you who is a volunteer that has experience in the field, and they'll be able to help you out. There you go. In the meantime, I'm going to go ahead and pass this over to John, who will start off our presentation today.
Great. Thanks, Dan. Welcome, everybody. Just a little bit about myself. I've been a SCORE mentor for about 2 years now. It's been an incredibly rewarding experience. Got to meet a bunch of people in SCORE that are really great resources for everybody, and as well as met a bunch of clients like yourself who are doing some incredible things in the state of Maine. So kudos to all of you. In my former life, I'm a retired CFO of an engineering firm. Did that for plus or minus 30 years. Seems hard to believe to say that. So I've got a pretty good breadth of experience in finance and admin and operations and IT and all kinds of stuff. Excuse me, I'm not a CPA or a tax pro, but I have in my obviously 30-year career planned for and prepared for many year ends and many tax years. So hopefully I can impart some wisdom to help you out. Here's just a silly picture of me out hiking. Um, Mostly I picked this picture just to prove that you don't have to be a geek to be interested in finance. So there you go. Well, with that note, let's move forward. Um, so just a quick overview of what we'll try to cover today. I'm gonna to start do with some just general bookkeeping practices before we get into specific year end stuff. Um, when you get the slide deck, there's an appendix that has some more general bookkeeping stuff. I pulled that from a prior workshop that Frances Keel did. And she works for Modern Bookkeeping Services, and there's a lot of good best practice information and information about just general stuff. So you might want to look at that when you get the slide deck. Some somebody's not on mute. If you could do that. Thank you.
Sorry about that, John. I'll make sure everyone's muted.
Nope, no problem. So we'll talk about some best practices, then we'll get into some year-end prep, talk about reviewing financial statements and reconciling accounts, and then how you work with your accountant, both during and after tax prep. And we should have some time for Q&A. I also told Dan if there's any questions to, just shout out during the time. So if you have any questions, throw them in the chat. So, the usual disclaimer, we're volunteers. We're not here to provide concrete tax, legal, financial advice. We encourage you to consult with a pro if you need such help. So, that's so much for the legalese, and we'll just move forward. So, why is bookkeeping important? Well, first and foremost, as a business owner, you're legally required to maintain accurate business records. So it's important from that standpoint, to cover your legal responsibility to the state of Maine and actually to the IRS as well. So doing bookkeeping on a regular basis is important for accurate tax filing, obviously. The accuracy in organization that you develop through the year makes your filing easier for both you and your accountant. I'm most of this presentation is going to assume that you're working with accountant, but if you're not, a lot of the principles hold if you're doing your own taxes. So just keep that in mind as well. Probably the biggest reason to do bookkeeping on a regular basis is it helps you understand your business and helps you make better decisions. First and foremost, can you pay yourself? How much can you pay yourself? It helps you look at how you might control expenses. If you look at your financial statements on a regular basis and compare them to your budget, how you're doing throughout the year. You can plan for cash needs, and you can see if you're in a seasonal business, how do you need to, squirrel away some cash when the slower months are there, and how you can spend money when you're busier. It also will help you try to focus some marketing efforts. Where is your best bang for your buck? You go after the best revenue opportunities. So there's lots of reasons to do bookkeeping and to do it on a regular basis to help you better control your business. If you're in a position of needing a business loan, you're obviously going to need to provide accurate books to the lending authorities or your bank. So it's another reason. And of course, we all hope we're going to grow our business. So when you become the next Apple or the next Meta, and you look to sell your business, accurate records are going to be important so that the next buyer can see the value of your business. Obviously, that it's when you go into business, it's usually not a goal to sell your business, but someday you might want to. So some best practices. It's really important to keep your personal and your business accounts separate. You don't want to mix mix your cash between business and personal. I encourage everybody, if you don't have separate accounts, to make separate accounts, and to definitely keep a wall between them. It's important to track and categorize various income and expenses. There'll be a slide about keeping it simple going forward, but you need to track to know what your revenue is, what your expenses are, so that you can better manage your business. It's also important to maintain documentation. You should keep receipts and invoices and bills and various things, um, so you have a record, so you can go back and rely on them, if you ever need to. A little bit about internal controls. It's really, if you're a large enough business and you have a staff, the person writing the check shouldn't reconcile your bank account. Is one of the first and foremost things, that an accountant and/or an auditor will tell you. It's You want to make sure that there's an error check to make sure that things are working well. And I hate to say it, but making sure nobody's ripping you off. Um, for the most part, that's never an issue, but it does happen. And you also want to make sure that you reconcile your statements, your bank statements, to your accounts, to make sure that the same principle works there, to make sure that what's in your bank is really what's in your bank. So just good general practice to try to have some internal controls, so that one person doesn't control the whole financial system. The KISS principle. I think we're all familiar with what that means. And my adage in all that I've done, and all that I recommend to clients, is keep it as simple as you can. Don't over analyze stuff that you don't need to analyze. The fewer the accounts, the better. As I say here, you can always add accounts later. But keep it simple so it doesn't overwhelm you. Obviously, complex businesses are going to need uh, a bigger set of books, if you will, more accounts, more things to track. But you can grow into that. And in terms of working with your books, do things that are repeatable. Every month you need to send out invoices. Every month you need to pay bills. Every month you need to do payroll. Those kinds of things. And so make it as manageable as you can, and incorporate it into your schedule. And again, keep things simple and make it repeatable. Um, will make your life a whole lot easier. Some more simplifying bookkeeping. Ensure your business and personal accounts are separate. I bet you can see a theme there. It clearly makes your task easier. There's also some liability issues there. If you commingle funds, you could have some potential liability that you might not even be aware of until it catches up to you. So again, keep personal separate from business. Um, use simple categories. Perhaps match it to what the IRS often looks at on a tax return, and but tailor it to what you understand. Some things might not make sense to you, so name an account, as you would expect to see it. And dedicate some time. Make time in your schedule. I often recommend to clients, to book time to work on and not in your business. So, we're all going 9,000 miles a minute, and just take some time to do the things to make your business successful. And one of those is bookkeeping. And the corollary to all that is, invoicing your client, collecting from your client, reviewing where you stand. I also suggest to people to put on their calendar, maybe quarterly, block an hour, look at your financials. How are you doing? Are you making your budgets? Are you not making your budgets? What do you need to do to tweak? Those kinds of things. So it's important to, as I said, book some time to work on and not in your business. So finally, before we get into some of the true year-end stuff, just a kind of mostly a recap, but it's important to keep accurate financials throughout the year. If you do that, the year-end process becomes so much easier. In addition to that, as you sound like a broken record here, but it will allow you to manage your business better. If you don't have an accountant, I suggest you find one who you like and hopefully knows your business. Um, they're not easy to find, as you probably know. So if you have one, keep him or her. If you don't have one, we often suggest you ask for referrals from a peer. It's much better to um, to have an intro to a CPA than to do a cold call. So referrals are king. Some just general final bookkeeping kind of stuff. Decide how it's best for you. Some people do it in via paper. Some people do a spreadsheet. Some people have accounting software. Um, it's all personal preference, but choose something that works best for you. And then a little bit about receipt management. Um, the days of bringing a shoebox full of receipts into your tax person is hopefully long gone. So, there's many ways to do it. Simple file folders. In today's world, scan and store stuff. Um, Many accounting softwares let you attach invoices or receipts to the entry you make. And then there are other receipt management softwares. Um, One thing I would suggest if you're not receiving vendor invoices or sending your clients invoices electronically, start doing that. Um, and equally check with your accountant to see if he or she has any recommendations for the above. The appendixes that I mentioned have some stuff on both bookkeeping systems and receipt management. So you could take a look at that if you're already not using something currently. So start getting into the actual year-end stuff. I like to tell people and remind people that they're responsible for their tax returns. You're responsible for the accuracy of your statements and your tax returns, whether or not an accountant prepares them. Both the IRS and the state of Maine holds a business owner ultimately responsible for the tax returns. So it is important throughout the year to keep accurate records and to give those accurate records to your accountant. And you obviously need to be comfortable with your tax return before you sign them. Don't be afraid to ask your accountant questions and review them with him or her, just so that you know what you're signing and understand the implications and it makes sense compared to what you knew what the business generated over the year. Not to scare you, but just to be aware that you are ultimately responsible for your tax returns. A couple of dates we'll talk about here, just for informational purposes. If you have consultants or contractors that you paid in excess of $600 in the year, you need to send them a 1099. They need to receive it by January 31st, and you need to file them with the IRS. And this is interesting, by March 1st if you file paper, or March 31st if you file electronically. If you have employees, you need to send them W-2s by January 31st, and they need to be sent to the Social Security Administration by January 31st as well. So if you're doing it yourself, you need to keep that in mind. If you have a payroll provider, My guess is they've already informed you of those dates, or their timing for being able to get those generated. So you need to keep that window open. Um, a note here is it's good to have a check to see for those consultants and contractors that you have their employee identification numbers on file, so that you don't have to do a last minute scramble to get their numbers. If you don't have their numbers, send them a W-9 now, so that they can get that back to you before you get into the year end nitty gritty, if you will. So just a helpful tip to get those updated now, and to keep them updated throughout the course of the year. From income tax deadlines, if you're filing as a partnership or an S corp, um, the due date is March 15th this year. Because of the weekend, it's March 16th, and the extension deadline, if you do file an extension, is September 15th. C corps, LLCs, and sole proprietors, um, are the due dates are April 15th, and the extensions October 15th. Just as a note, if you're filing, well, you are filing a personal return, so business returns will need to be filed early enough so that you can incorporate them into personal returns, which you also do on April 15th. So it's just a timing issue, to work through when your business tax returns are going to be due, so you can incorporate them into your personal. And another final note here is on if you file an extension, you will be expected to pay um, your tax due on the due date to avoid penalties. So that kind of means you or your accountant need to do a calculation of what you expect the tax liability to be, whether or not you file an extension. So it's just keep that in mind as you go through the process. So a little bit of year-end prep. Um, I recommend that you set up a meeting, if you already haven't, to consult with your accountant. Um, Find out, what they need, what they expect, what kind of information do they need, what kind of detail do they need. Do they need copies of your invoices, or is a schedule of them okay? Um, in how the best way for them to receive information. Do they want a spreadsheet? Do they want your files? Um, if you have an accounting system or a record management system, can you give them access, so that they can directly access your records? Um, Again, there'll be security in there, so that you're comfortable providing that access. But find out how best to work with them. Also, good time to talk to them about any year-end tax strategies. If you're having a good year, does it make sense to do, and you want to do some charitable donations? Does it make sense to make them by the end of the year? Keeping in mind that you'll need to compile some documentation to prove that they were legitimate charitable donations. Is it makes excuse me, does it make sense to aggressively bill and collect invoices? Similarly, should you be paying expenses prior to the year end? And again, if you're having a good year and you want to pay bonus to your employees, does it make sense to pay it by the end of the year to be able to take the expense deduction? And if you need to purchase any assets, the timing of it, should you do it by the end of the year, or should you just wait till next year? And most accountants will have a tax preparation checklist, so ask them for that, so that you can see what they need. And I know in my career I used to get a quite detailed list of what they wanted and when they wanted it, and um, so I'm sure they have those kind of checklists if you ask. Um, so with that done, You can develop an internal timeline um, using their checklist. Again, it depends on the level of your staff. If you have a staff, you can divide those responsibilities up so that if the burden is shared amongst your administrative people. But it's important just to have that timeline so that you know what you need to accomplish and get to your accountant on a timely basis. You obviously want to gather financial statements, your bank, your credit card accounts, any loan balances, payroll reports from your payroll provider. You probably prior year taxes, although your accountant should have all of that if you've used them in the past. But just gather all the financial information that you think you are going to need for a year-end purposes. And then obviously, if you get any tax forms that are needed by the accountant, whether you get 1099s or other kind of forms, 1099s either because you were a consultant to somebody else or 1099s for interest or if you have investments or those kinds of things, the accountant may need those. I also, in prep for this, I Googled, and Google is a wonderful thing. I Googled, year-end bookkeeping checklists. So here are a couple that I thought were pretty cool. Again, not being a geek or anything, but so down here, and these links are live in the site, but here's a year-end checklist. Here's one of them. Give you a closing schedule, reconcile bank accounts. A lot of this stuff you'll see in the next couple of slides I used because I think it's a useful thing. And here's another one. Oh, maybe, you know, reconcile various accounts, those kinds of things. So you can find these pretty easily by just Googling. But here's a couple that I thought were kind of interesting and looked pretty thorough. So I thought I'd throw them on the slide deck so everyone has them. A couple other year-end kind of prep stuff. You know, we kind of talked about collecting client invoices, making sure they're up to date. Obviously, you want to do that as matter of course, anyways, because you don't want client invoices to get stale. But year end's a perfect time to give them a nudge, say, look, I'm trying to close my books. Could you pay us before the end of the year, kind of thing. I know I have made many of those kind of calls over my career. Also, pay any vendor expenses that you might need. There may be some tax planning issues, as we talked about, whether to accelerate or to delay payment until the next year. You obviously want to finalize any payroll, employee expenses, or benefits by the end of the year. Make sure your payroll's up to date, your employee expenses are right, your benefits are all ready to roll in terms of year-end stuff. I also encourage people to verify that all your sales tax, payroll taxes, and other tax payments have been made, received, and recorded. Sadly, there's been a few instances where payroll companies have not actually paid their taxes. So I encourage you to do an error check on your if you have a payroll provider, check with the agencies to make sure that your payroll taxes have indeed been paid. You can log into your account and verify all that. It's payroll companies shouldn't be insulted by that. They should be relieved that somebody's actually checking on them. So again, it's just a good prudent practice to make sure that everything's okay. And then, of course, make the usual monthly bookkeeping entries. I mean, again, if you're staying current with bookkeeping kind of stuff, year end shouldn't be as scary as it sounds like it is. And then one thing that I regularly did in my career is I use prior year entries. to make sure that I made similar entries in the current year. So what could some of those be? If you have any, if you have assets and you have a depreciation schedule, are there any adjustments you need to make? That's a pretty common one. Make sure that any owner draws or distributions are up to date and equal what was actually taken out of the business by the owners. Um, write off any uncollectible invoices. No sense carrying um, an invoice for a business that went out of business, for instance, or ones that you just feel aren't going to be collected. Make any adjustments to income or expenses that reflect the current year. There could be a whole host of them. One common one was if you're an accrual taxpayer, adjusting um, interest expense depending on when you were paying loan payments, those kinds of things. But there could be a whole host of things that your accountant may recommend. Um, update your fixed asset schedules. Did you buy a truck this year? Is it on the schedule? Did you sell a printer? Does it reflect in your disposal records? Be important for your accountant to do depreciation schedules based upon that. Depending on the softwares that you use, they may be more intricate than others, or it could be a simple spreadsheet, this fixed asset schedule. But it's important to match that to any ins and outs that you made in terms of purchases or sales of your assets. And then ultimately, your goal here is to prepare a financial statement for internal review, and we'll chat a little bit about that now. So, looking at your balance sheet, um, compare it to last year. Your business as well as anybody. Does it look right? Does it make sense that your cash was plus or minus, what it turned out to be? Are there any significant variances that don't make sense? And if they are, do some research into them. Investigate any unusual or strange looking changes, basically. Um, and just do a sanity check on the balance sheet. And I'll say that on all your statements for that matter. Similarly, income statement, compare it to last year, compare it to your budget. Does it make sense both compared to last year? Do you feel you did better than last year or worse than last year? And is that reflective? Similarly, do you feel like you did better or worse than your budget? And is that reflective? And again, investigate any changes that might need adjusting. Some simple things, make sure your revenue equals your revenue tracking system. Does it all flow? Did your tracking system flow correctly to your financials? Um, the assumption usually is it does, but you never know. And then you want to confirm things like charitable donations are correct. It's easier for you to make that correction than have your accountant make it. So you want to look and make sure that things like memberships aren't recorded as a charitable donation. Those kinds of things, and then verify that no asset purchases were booked as expenses. So sometimes that I don't know, that $5,000 PC that got bought, somebody might book it as an expense and it really should have been an asset. So look at those kinds of things. Most firms set up a minimum value of an asset to expense. It's up to your firm to do it. Sometimes the benchmark is $500, sometimes it's 1,000, sometimes it's more. But you want to follow whatever that benchmark you've used. So make sure that there's nothing that needs to be recategorized. Again, it's easier for you to recategorize it before you send information to your accountant. Makes the questions a lot less burdensome for both them and you. And then look at any expenses that didn't show up last year, or vice versa. Was there something on the books last year that wasn't this year? And if so, why? And similarly, was there something on the books this year that wasn't last year? And if so, why? Um, again, the business, what changed from year to year, and does that make sense, or was there an entry that was missed? Those kinds of things. And the final statement is, in some systems generate one and some systems don't, is the cash flow statement. Again, if it's available, does it feel right? You can obviously tell my theme here that you know the business. Um, you're the best judge of whether the cash flow was right. So was cash from operations on the cash flow system? Does it reflect the ins and outs of the business? And then, does the investing and financing piece of that provide an accurate picture? Did you purchase assets? Did you take a loan? Those kinds of things, and how does that reflect on the financial statements? So once that's done, or in conjunction, really, you'll want to reconcile your various accounts. Cash is king. You want to make sure your bank and credit card and loan accounts all tie out to your financial statements. Generally, cash is the first thing that auditors and CPAs look at, because it's the one thing um, that can impact the business. Well, lots of things can impact the business, but cash is obviously an important piece. It's also an important piece, to be sure that it's accurate. So when you're looking at your bank statements, you want to, before you send stuff to the accountant, you want to resolve any uncleared or unreconciled items. Is there a check that's been outstanding for 3 months? If so, call the vendor and say, are you cashing it, or did it get lost? You don't want to carry those things, going forward if you can help it. Your accounts receivable aging report. You want to verify that matches the outstanding invoices you have on file. Again, are there any receivables that need to be written off? Either business out of, client out of business, a disputed amount that you're not going to collect. If somebody paid you $1.50 less than an invoice, write that $1.50 off and get rid of it. It's not worth the effort to go back and collect that from a client. And if you happen to have inventory, you want to verify that your ending balances reflects the physical inventory count and the value of it. Depending on your business, you may need to conduct an inventory account. So you want to have that done, prior to year end if you can, and just to make sure that the counts are accurate. And then back to the fixed assets, you want to make sure your schedule is reflective of your bookkeeping accounts. So it's important to tie out all your subsidiary accounts to your actual bookkeeping accounts. Couple more things on reconciling various accounts. We kind of talked a little bit about payroll accounts and tax liabilities. You want to make sure that those balances are reflective on your balance sheets and your income statements. And again, the plug to make sure that those were actually paid to the various agencies at hand. You want to make sure your accounts payable aging reflects what you owe, and it equals what's on the financial statement. And if you see things that don't look right, dig into it, make the adjustments. Again, adjustments made now are easier than during the process of the tax prep. We also want to compare any loan or mortgage balances to your year-end statements to make sure that those are in sync. Again, hopefully you've been doing that through the course of the year, so it won't be a big deal. But again, it's just another check to be sure that everything's buttoned up for the end of the year. And I think we talked about this before, but does your financial statement revenue equal your revenue tracking system? Again, to just be sure you're in sync, make sure things look the way they should. And again, you know your business better than anyone, so you know whether they're an accurate reflection of your income for the year. Couple things about working with your accountant. We talked about earlier meeting with him or her before the actual start of the tax process. So that you know what to provide them on a timely basis. It's important to provide accurate information when they need it, or access to. We talked about providing them login access to your QuickBooks account, or if you have a record management system or a sales system, whatever systems they might need access to. Some accountants may want that, some may not, but it's worth the ask. Important to be reachable and provide answers to them promptly. They've got a lot of clients at the end of the year. They've got some complex deadlines. You don't want to miss the window of opportunity, if you will, to get them the information they need, so that they can continue to work timely on your tax returns, on your year-end stuff, so that you can file when you have targeted your filing date with them. And even though they're busy, don't feel like you're a bother. If you don't be afraid to ask questions and get clarification. If there's something you don't know, something that just doesn't feel right to you, ask them and ask them to dig into it or explain what the issue might be. Again, going back to you being responsible for the accuracy of your reports and your tax returns, it's ultimately your responsibility to know what's there. Also, most accountants will ask you to sign off saying you provided accurate information and they did the best of their ability using that and all those kinds of things. So they're going to most likely ask you to sign a document that says, you agree with the information that you provided, and they could use that reasonably to fill out your tax returns. So just be, in general, just be available to them, and have a good two-way communication set up. And it will work much, much smoother. So post-tax prep with your accountant. Once they have given you your tax returns, hopefully they'll spend some time reviewing it with you so that you understand what's there, you understand the accuracy of it, you understand any potential tax liability or refund that you might be getting, and why that occurred, just to get a good general flavor for what they did for you, and did your tax return come out how you expected it to come out based upon how your business did this year. You also want to discuss any estimated tax payments for the next year, and how they were calculated and why they were calculated and who's responsible for paying them. I don't know, some accountants will schedule that for you. Others will have you do it yourself. I recommend, if you're making estimated tax payments, that you set them up and make them electronically. both the state of Maine and the IRS let you set that up electronically. You can do the whole year's worth, so you can set up the April, June, September, and January payments so that they're automatically done and taken out of your bank account on the right dates. That way, you don't ever forget them, and it's just an easier way to do. Of course, you have to plan to have the cash in those accounts when they're due, but but setting them up makes a whole lot of sense. You probably also want to ask if they had any tax planning strategies that they recommend. You know, did they see anything when they did the return that you could take advantage of to reduce your tax liability in the next year or future years? Uh, and then if they came across any corrective action that they're recommending, you'll want to understand what that was and why they found it. You know, it's not going to be the norm, but sometimes they come across things that they recommend you take corrective action on. So just have that discussion with them. And then obviously if they recommended any adjustments for the tax year, you want to make them on your books so that you get in sync with them for the next year and make a note of those for the future years as well. And then the next two bullet points are kind of like using them as a resource. Did they notice any areas that you could improve your business or your record keeping? Do they have any suggestions to make your business more efficient? Um, those kinds of things. And then, if you are interested, talk to them about meeting with them periodically to review your business and your strategic business plan. Meet with them twice a year, once a quarter, whatever's comfortable. Obviously, you got to be cognizant of them and their time and the cost to do that. But they're the experts, and if particularly if they're well, they're familiar with your business, but if they're familiar with your type of business, they may have some good insight in terms of best practices and how you meet your budgets and that kind of things. So in general, just rely on them for the resource that they can be, and and use them as a partner going forward. So that was kind of it in terms of my presentation. So I'm happy to, and that's my email. Happy to answer questions or chat with you about anything. Happy to also take any questions. I don't know if we had any in the chat at this point in time.
We haven't had any in the chat yet. Just someone was asking about how to get the slide deck, which will be sent out after the presentation.
Okay. And just, I'm going to go ahead here. You will also get a survey, and we definitely appreciate any feedback about the survey and about the whole process. I'm just going to sneak ahead here and show you some of the slides in the appendix that I talked about. It's going to be slides about choosing the right bookkeeping system, how to save and store receipts, and then some just general how to use some process time and how to do some of the general bookkeeping stuff. I kept these in here because I didn't know. It's useful, but I didn't know if there were people starting out in business, if they were looking at some ways to figure out how to best track their business. So there's some good general information in there that I thought might be useful.
We did have one question. Oh, it looks like we had another question in the chat.
Sure.
One Person is asking, can you briefly explain the process for bookkeeping when you move from one to another mid-year? They typed STTE in the chat. I'm unfamiliar with that, if that's an acronym.
What was it? What was in the chat? Sorry.
State. Okay.
Oh,
So
state.
can you briefly explain the process for bookkeeping when you move from one state to another mid-year?
Ah, interesting. Well, the bookkeeping itself is probably not all that different. Um, what is going to happen is you're going to have to file two tax returns for two states. And depending on how clearly the time frame was when you moved. So let's just take, you file on a calendar year tax basis. Say you moved your business from Massachusetts on July 1st to Maine. So you would file your income and um, expenses prior to July 1st would kind of roll to Massachusetts, and post July 1st would kind of roll to Maine. It's not quite as simple as that, but that's the general gist of what will happen. Um, if you were a sole proprietor, similarly, I'm just trying to think the easiest way to explain this. Say you move to Maine and you're now a Maine resident, you would file all your income to Maine. However, you'd also file a tax return to Massachusetts. And on your Maine return, you could um, basically take credit for whatever you paid to Massachusetts. Did that make sense to whoever asked the question?
We'll give them a second to respond. Yeah, looks like it did.
Okay. All right. Cool.
Yeah. I had another question here, pretty interesting one. In addition to self-employment, I have a part-time W-2 job. I've had the idea of pulling a little extra federal income withholding from the W-2 to cover my self-employment in advance, as opposed to paying larger quantities quarterly. Does this make sense?
Um, you could do that. It's really tough to say without knowing specific numbers if you're going to be able to pull enough. Um, a lot of people do that who might have if they ever got a say a full-time or close to full-time W-2 job, they'll have more taken out of their pay. Um, but it's really hard to tell. I mean, you could have a weekend 1099 job that you make a whole boatload of money, and if you're not gonna make you're not going to be able to withhold enough out of your W-2 to cover that. So it really is a depends. I hate to do that, but it really is a depends. And what I would do is take a look at your income for your W-2 job and compare it to what you might expect from your 1099 job, for lack of better words, and see where that sits and see if you think the extra tax withholdings will work. Um, If not, you probably want to look at doing some estimated taxes for your W-2. I'm sorry, for your 1099 work. But it's tough for me to say whether it works or not, quite honestly.
That makes sense to me. All right, it doesn't look like we have any more questions in the chat quite yet. If you do have a question, please feel free to put it in there, or feel free to unmute yourself and you can ask.
Yep. Well, I hope this was helpful to people. Um, it's again, it's nothing you need to be overwhelmed with to start doing the year-end prep. Again, if you've stayed pretty current with your accounts during the course of the year, it really isn't a big deal. It's just consider it the 13th month, if you will. You need to do a bunch of adjustments as needed in the 13th month.
It's like we did have one last question that came in at the end here. Would it be easier to dissolve an LLC in one state to become a sole proprietor in a new state, or to just move the corporation?
It's honestly above my pay grade, and a lot of it depends on the state, um, and it depends on the business, and it also depends on what you're trying to get out if you're being an LLC versus a sole proprietor. You know, an LLC gives you some personal liability protection that a sole proprietorship doesn't. So I can't say whether dissolving the LLC in the former state and becoming a sole proprietor in the current state is better or worse. There are both legal and tax questions, more legal in this case, I would say, because my assumption is your LLC in the state you filed as a basically a sole proprietor anyway, so the tax implications are going to be the same. It's really a question of the um, legal issues. And as far as moving the LLC, it really depends on the state. Some let you do it easily, some don't. And it again, it's beyond my pay grade, quite honestly. I don't want to give you concrete advice that I'm not qualified to give, quite honestly.
That sounds like it'd be something that's very circumstantial. It might
Yeah,
be best
yeah,
discussed with your score mentor.
and that could be something that a score mentor could help you with. If you want to have a conversation, I would suggest, asking for a score mentor, and we can start the process with you. Um, we often will give you information about how to do all that, but we'll also suggest that, as as the disclaimer on these slides said, we're not tax or legal advisors. You may want to consult it with an attorney as well.
All right, with that, I want to say thank you, John, for presenting to us today, and thank you everyone for joining us. You will get the slide deck and a copy of the recording and a follow-up email, and hope you have a wonderful day.
Great, thanks. Happy holidays, everyone, too.
Bye.
Bye.